Yeehaw! What that? Zero sugar, Dr. Pepper. What up, fam? It's your boy Theos. Let's go ahead and go over the trade that we banged today. He's slapping 3K. So if you want this shit, you'll get this shit for yourself. You'll roll your sleeves up, do your due diligence, and fucking study per ICT, bro. It's all there. You just go and demo, and backtest. Stop trying to pass prop firms. There's no reason to pass a prop firm if you're not consistently profitable on the demo. So as you can see, somewhere there's the entries. This is the target. Alright, so if we start on the daily chart, MNQ, this is the September contract. Our main focus is this right here, this imbalance, more specifically this volume imbalance here, which is the high of this daily volume, daily fair value gap here. So this is our daily structure, and since we're delivering away from, I'm not going to go in grave detail, but just go through it real quick. Inversion with the double sweep. So we're sweeping right here, and we're also taking this here, so the relative equal highs, getting swept. It's delivering down to an old imbalance. So if our main objective is bearish, we're going to look for bearish entry models to draw towards the target lower. Alright, so if we drop down to our 4 hour, you could use this wick here, this wick low, that's all alone, the 2 a.m. or what I was using, the hourly chart here, this wick from 5 a.m. Tuesday, August 4th. You could tell it's literally just here, all alone, isolated, 0 to 1. I'm just gonna lock that. There we go. So now that we're on our hourly basis, knowing that we're delivering from higher time frame sweep, swept liquidity, we're delivering lower, so we're looking for lower pricing overall into a daily imbalance with this daily. So here on our hourly structure, if we're looking left, always refer left, and we see this lonely wick, use wicks as gaps, or treat wicks as gaps. So we're mainly focused on the consequent encouragement of this. Let's see, where's it at? Bottom right. There we are. If we're mainly focused on this price as the target, well, we're going to look for entry models that are supporting lower pricing. Right off the bat, you could see we have an hourly fair value gap here being respected. Hourly fair value gap being respected here. So if we know we're mainly respecting bearish price action, and we're not suspecting price to draw any higher than this wick here, I'm just going to color it this. If we're not suspecting price to close above this wick here, 10 a.m. Friday, and we're suspecting most bearish price action. So this 1 hour fair value gap here at 1 a.m. Monday, we're seeing respect in price. 7 a.m. starts New York session. You could see manipulation, but the bodies, what are the bodies doing? Zoom in, Fibonacci 0 to 1. Is there a volume imbalance? Close 625, 625. Nah, just looks like it. So 0 to 1 Fibonacci. Notice the bodies, they don't want to close above the upper quadrant, so that's bearish price action. So when we come into lower time frame, right, we're looking again supporting to our target, which is drawing lower. So what do we know? We have relative equal lows here. You see how this one here, let me put this yellow, this one here, see how it's higher than this one? I'm not going to go into grave detail, but just notice how there's no body closure below, but generating liquidity. Anyways, we jump back to our 15 minutes, so we see we have this 15-minute order block here. Minute order block, right? And then if we know anything, we're looking for respect. So this is optimal to see. And then you can see here on the 15-minute, no wick low. No wick low. 15-minute candle. See? Right here. See the wick again? No body closure. That's twice. You see it now. One. And then here's two. Okay. So we have this 15-minute fair value gap here. I'm going to put it yellow for right now. Take a sip on the no sugary, Daki Peppy. Anyhow, if you truly want this, you'll get it. Just go watch ICT. Everything's on ICT's YouTube. You never needed me, you never needed a Discord, you never needed anything else besides yourself, a notebook, and time. Anyhow, drop down to the 5-minute. And then this is the 15-minute that I got. Okay. And here, let me draw this back. Alright. So, let me make this look a little cleaner for you. Top. So, you see there's 3 confluences here, all higher time frame. Now I'll give you the low time frame sauce. So 7:30 starts, true, algo, hunt, right? Look left. 5-minute fair value gap plus order block being respected. 5-minute FVG. 5-minute fair value gap being respected. And there's this order block. I'm not going to mark it because it's the 15-minute order block. It's just structured on a 5-minute there. See it? 1 a.m., 105, 110. Okay, so 5-minute is being respected here. So that's now 3 PD arrays being respected. And now this is where that 15-minute is formed, right at 7:30. See? And we know about time. We're waiting for 8:50, 9:10, or 7:50, 8:10. Either one. Me personally, I love 8:50. That's just my personal favorite, but 7:50 is also a good one. As you can see, there's inversion, fair value gap, order block. Okay, there's enough time. Okay, there's so many entries all the time, bro. Once you start to know what you're looking for, it's always there. Anyhow, 8:50, 9:10. Drop down to your 1-minute chart now. You're all framed out. 8:50. Then I don't. Where was my entry? Like 9:03. It's right around here. Entry. I mean, you could see it there. Not faking that. Entry. Target. Entry is 206. So yeah, like right here. 905. And then you see right here, 841, manipulated high, respecting 1 minute. Fair value gap now. I'm gonna put this yellow so you see it. So 1 minute's being most respected. Our stop is right above. Here. The target being done there. 54. Right before. It's on that candle. 940. And yeah. I don't know. I'm really losing drive to want to do this YouTube or post or anything. You know, you give. I can only imagine how ICT feels. You know, let's get straight for a second. Like giving the sauce, and putting it out there, and knowing that it works, and people still so ignorant to not do it, not roll their own sleeves up, do their own due diligence. But who am I to say? You know, like the gym works, diet works, and people still fail to do that and run their mouth about, oh, I can't lose weight, oh, it's genetics. Like, bro, you just haven't dieted. But anyways, you see market open 9:30 on the dot. It draws right back to this 1 minute fair value gap. That was 8 o'clock on the dot. Key fair value gap. This was 8 o'clock. Key FAG. And you can see prices respected. And we're just slapped everybody. And the market right here, is 9:50, 10:10, goes into consolidation for afternoon reversal. Silver bullet, 10 o'clock, 11 o'clock. I'll just mark 10, 10. So 9:50, 10:10. Failing to draw to our original target. So showing signs for leaving it for later. Look at what it's doing. And then we, after taking our original target, sweeping, you can see it gives you an inversion fair value gap here, and then into 11 o'clock. And first present gets in first. This first present's right here. I would use 9:30, but keepsake shows inversion into 12:50, 110 macro, and it just slopped for the day. I don't know. Everything's all on YouTube. ICT's YouTube. I mean, look, a couple fragments of eternal model is more than enough for somebody, I think. My opinion. Nobody ever really asks questions. I don't know if anybody actually truly studies. Like the real ones, they're all on X, and I'm realizing there's so many levels to this content, so many levels to teaching, leading, mentoring, stewardship. Anyhow, that's it then. Have a great day.